Just click quickly reflection, and on this episode I'm going to reflect on a trade that I executed on a Friday that ended up being a win. Once again this week, covering the losses that had accumulated throughout the week. So diving right in, starting with the daily time frame. That's where the idea of the trade came from. Looking at the higher time frame bias, or rather direction of where the market is heading, and coming to the lower time frame and executing in regards to what the higher time frame is doing. Now coming and seeing on the daily time frame, we can see here this is the day of the FOMC, the rates decision day, but the market crazily came down, and on the following day it managed to close below here, but subtly, not really strongly as the previous day had happened. So creating much of a structure shift, yes, but not with that strength. Then come on Friday, we went down and we reacted from this fair value gap on the daily, whereby the fair value gap is relying on these buyers, the bullish buyers that had been there all along. So having in mind that we came all through to that daily fair value gap, it gives the signs that the market still wants to continue with the bullish move. Otherwise, we will have continued going down after this bearish day right here, but we can't rule it out. There's still an inefficiency that's right here in form of a fair value gap after that crazy move. So market may still be repressing to that gap, then proceed on going down lower. So if at all will happen to respect this gap and proceed going down lower, then it's something that I'll still continue executing on the bearish part of it. But rather, what will I want to see? I'd love to see a displacement through the opening price of the Friday candle. Opening price of this Friday candle will be right here. So once I see price displaced down this level with some form of a strength, now I'll be confident that we'll be coming down to take this low here, the Friday low, as well as this low that's remaining here. So that will be a bullish bias for me once we close below here with momentum. But if we proceed going up higher and we happen to close up above this opening price here, if we manage to close above this opening price once again, now that will be an indication for me that the bullish price action is still going on and price is still going higher. So until any of those happens, that's why I'll have a distinct bias of where the market wants to go. Currently we are still hovering around here. There's still this inefficiency here that I can't rule it out. I'll wait and see what market will do in regards to this inefficiency here, because it was created after this crazy down move right here of the funds rate decision. So now the trade that I took on a Friday here, this candle here, and I was basically reacting to this bearish move since on Thursday, the day after the news was released. There was not that much of a follow through. Basically, after such a crazy move coming down, you want to see the following day market reacting in the same manner, or having the same strength and force, a bearish force going down below. But that didn't happen here. The market didn't follow through on the following day. Actually, we didn't even close below the week of the previous day. So that was a sign to show that market still had some bullish move, probably wanting to come back and retest this inefficiency for it to proceed going down lower. Coming on Friday, I had that on mind and I was ready to start the retracement. I was viewing it as a retracement and not as a reversal move. So that's the idea that I had in mind on Friday. Going down to the 1H. Now, as you can see here, this is the day of the crazy move. Then on the following day, there wasn't much follow through, though the market still came down, but there wasn't much of a follow through in terms of the force of the previous day. So having that, there was that, I saw that, so I was ready, on my side, I was ready and planning on how I will come and take out some of this liquidity that was lying right about here. So once during the London session was coming down, I was still observing on this market on how it was coming. We had taken out the previous day low right here and we displaced down well, but coming throughout the New York Open, market starting retracing back and not retracing back easily or casually. It was coming back strongly. So in regards to what the London and done and seeing what the US now, the US session was doing, so I was really gearing up now for my trade setup, which was trading the opposite direction of the market, or rather the retracement of this bearish move that had happened. So I was ready to react in regards to it. I was, yes, against the bias, but not really trying to call out the low right here. But according to the price action of how it was behaving, price was really giving sense of wanting to come retrace back, take some of this liquidity and probably proceed going down lower. So going down to the 15-minute, that's where I really framed the idea. Now the daily and the 1H time frame, those I did earlier. I actually did them during the London session as I was waiting, gearing myself for the New York session. So that's when I did the daily and the 1 hour time frame analysis, gearing myself up for the execution on how I'm going to execute it. So coming down now on the 15-minute time frame, we can see here the previous day low was well displaced during the London session. So this again was another sign that market really needed to go down. There was no need for it to come back up. So having in mind we had this bearish move and the other crazy day that was very bearish. So with this displacing the previous day low as well as the Asian low, displacing it during the London session. So it was a much more evident that market was in really dire move to continue doing what, going up. So as the market was retracing up, I was watching and observing it now during the New York Open. As the New York Open up around this candle, I was watching to see, and once I saw this expansion on this candle here, now I was really interested in watching what the market will do. We had some inefficiencies here, having in mind we displaced below this low on the London session, so market will have find some resistance right around this inefficiency here and proceed going down. As we can see, we had sort of started reacting to the inefficiency with these wicks here, but during now the NYC open right here on this candle, market came, blast it up and then retraced back low, now respecting the halfway of the inefficiency. So that was enough for me now to believe the bias of starting to go up, or market wanting to start pushing up high. After now seeing that reaction, I went straight to the 1 minute time frame. After the NYC open and seeing the reaction of the market, of it not really interested in going down, so I came down on the lower time frame, my execution time frame, 1 minute, where I executed the trade. And okay, where are you? I executed the trade right here. My profit was right up on this new day opening up, the mid part of it. So that was my target. Also, since it was a Friday, I didn't really want to have a crazy target right over there. And this trade, of course, I recorded myself taking it, executing this part of it. So I'll link the video at the end of this, so you can go and see how I executed the video and how I ended up taking that position. So coming right here as the market opened, right about here, we had ranged right here from New York open, we had this range, then market up. As for once I saw this and I saw market now come again and displace below here, I thought maybe now market wanted to react it to started going down. But now, according to me, now I done on my analysis and I was only thinking of the market now going up and not any other direction. So I wasn't thinking of even taking a bear. So I wasn't much concerned on that move going down. But once I saw this fair value gap here being inverted by market coming up here, closing above it, I annotated it immediately as an IFG, and I now waited to see what the market will do. Once again, once we came and displaced up above this high here, point of high liquidity right here. So I took this as a manipulation, purging this liquidity that was low here, being the manipulation. Then now being now the move that the market wanted to see going. Since now we came and we displaced up above here, I immediately went ahead and executed my order on this gap that was right here. But once I saw we closed up above here, now it already made up my mind that I want to see markets now going up higher. So I executed the market there with my stop loss being right below the midpoint of this IFG. Since I didn't want to see market now come again here, we'd already taken out liquidity here, so I didn't see the need of markets, or rather the market didn't have any other reason to come and take any other point of liquidity, because now wanted to go and tap in the liquidity that was resting up above. Once there was that structure shift, I immediately entered my order, placed my stop loss and my target right up above there, targeting this new day opening up right here. And that was it. The market went ahead, hit my target, and I was okay. I managed to replace the losses that I'd taken, like I had accumulated throughout the week, and I was happy with the trade. Again, another setup that happened as I has outlined, or as I had analyzed it, and as I had wanted to see it happened, and I saw it happened, and I executed upon on it, and I was happy about the setup and even the execution as everything went about. And that will be it for this week's Just Click weekly reflection.